Holy moly, look at the S&P 500. If you're panicking right now based on what you see in the stock market, at the risk of stating the obvious, let me show you one basic thing that you should do before you panic. There's a lot more to this, but this is a very basic thing you should do. And if you haven't done this, now you know. So, you look at the S&P 500 index and you see all this red, right? But right now, we got to look at the scope. We're looking at 1 day. Let's move back to 5 days, right? If you go back 5 days, we see it went down and then it rose up. We had a high of 5,900. And since then, it's been in a downward trajectory. Now we're at 57.69. The graph is in red, and red means bad, all right? But before you panic, you should understand the perspective, right? You're really zoomed in a very, very tiny moment in time. But you're not a high-speed trading algorithm, so you need to look at the broader patterns over time, right? You need to expand your scope. So let's go back to a month. And now we can see we do have a general downward trajectory. So it still looks like, holy moly. And I'm not saying it's not holy moly, but I'm saying before you make any decisions, this very, very basic thing should have been done. Let's expand to 6 months. Okay. All of a sudden, it doesn't look as scary. Still looks bad for sure, but notice how it's not looking as scary as it is before. And I'll tell you why if you haven't picked up on it. Look at how much down we've gone from here. This is like technical analysis, right? So if you go back to December of 2024, you can see it going down a similar amount. And if we expand back now, what we're seeing has some friends, right? If we go back to July of 2024, we see a similar drop ending in August of 2024, and then we see it rising back at a similar velocity. So if we're glass half full, we could say maybe something like that might be happening as well. So do you want to buy the dip? That's another question to answer. But the important thing is you need to gain perspective by understanding how serious is it of an event that's happening now. In order to understand that, you have to zoom out, right? The market's always going up and down. If you're looking too closely a day or a week, you can be misled into thinking that things are much better or much worse than they are. We could even go back 5 years. And when we look at 5 years, we can now see that there are many such dips as we're seeing right now that have occurred. Just loosely looking at this, we're not going to get too technical here. From what I'm seeing here, looks like I see one, obviously this year. I see one that happened. I think we saw that one before. That was July of 2024. I see another one which took a little bit longer. Looks like July of 2023. So it's interesting. July, 2 years in a row, seem to have something like that happen. I see a peak right here. We're looking at August of 2022. The drop seems similar to what's happening now. So every once in a while, we have these dips, right? And notice the change of the language. When you zoom out, what's happening now is a dip, right? When you're zoomed in, oh my goodness, the market is crashing. Everything is gonna, the world's coming to an end. So I'm not saying that what's happening now is not a big deal, because I believe it certainly is. I'm just saying, before you make any kind of assessment like that, you should always be zooming out to get a perspective. What you're looking for is how unique is what's happening now compared to normal market volatility, right? Not on a daily basis or a monthly basis, we can see, but we do see every few months, maybe 5, 6 months, we do see a dip like this for various reasons. So we're not yet in a category of like, holy smokes. Now you start considering the data behind this in terms of the tariff war and what's happening with the government and all the layoffs. Then you might get into a different level of analysis where you believe this is going to continue and it's actually worse than it looks like. But if you are strictly looking at how much down it went in the last week or even the last month, and you're basing that, like that's the whole basis of your, I gotta sell everything, you're not doing it right. Always look back and zoom out to get a better perspective of what's happening, right? That's how you can assess the significance of the current market movement within a week, a month, or even a couple of months, right? Then once you've done that, then you can also look at the data in terms of, what's happening? What are the reasons for this? And do you believe that those reasons are an indicator that there's more pain to come or that this is temporary? I'll leave you to make that assessment, but you should not ever be looking at a daily graph, a weekly graph, or even a monthly graph and using that as a basis of panic. And you should never really be panicking anyway.